Well, hello, traders and investors. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets. We're doing it from a neoclassical perspective. That means we're looking at supply and demand on the charts. We're using that to make wise decisions about where to put our money, how to manage our portfolio, how to outperform the market over time without as much risk. That's a big thing, and most people don't think about beta. They don't think about, how do you put a portfolio together and you don't have a lot of risk in it, yet you're able to perform as well or better than the market. Especially when the market takes a spill, which, hasn't been that way for, 7, 8 years. It's going to come, folks, and, if you're not ready for it, you really need to think about it because that will come along again. I do this show 4 times a week, every Monday through Thursday. It's broadcast at 4, 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel LA Little. If you want to subscribe and you haven't to the show, just reach up right-hand corner, hit the subscribe button. Anytime I push public content, you'll get a notification. When I say, the portfolio, before I go into this, I just want to show you, we've made available now on the site here the ability for you to take a look at what the portfolio performance looks like. So if you come to the membership, the performance tab, you can click that now. There's a little bit of verbiage, but the performance of the portfolio is in there. Now, we won't update it every day. We'll update it periodically, but you'll be able to kind of keep track of the kind of performance we have on a given day compared to the S&P if you want to. And we have the same thing not only for the shared portfolio, which is to join the community. We have a retirement service, we call it, which is long-term investment basically. If you click on the performance there, you have the same thing, right? And this is since inception. The other one is year to date. Here's the inception over, it's about 6 years now, 5, 6 years. You can go back, it's about 5 years. You can go back and you can see what that performance looks like. But you can see, we had a sideways period just like S&P, and of course we start going higher again when the market is ready. We protect on the downside, we make money on the upside. You can come over and stare at these if you want. If you want to join the community, you really should. I'm going to plug it one more time tonight, and that is that you're not going to be able to get me forever. If you join now, you basically get me one-on-one to start you off, to get you running. And I'm doing that because I want to make certain that the first set of folks that are coming in on the new site where we're focusing on education, on performance, I want to make sure you hit the ground running and you're able to perform and get your money's worth out of this site. And I don't know how long I'll be the one that does that. Eventually it will be turned over to mentors to do for the most part. But if you join now, you get me. And, I would have jumped at an opportunity, 20 years ago when I was just starting out, if I could have found someone who really knew what they were doing that could teach me how to trade, teach me how to use a model that's simple but elegant, right? That works. And the key part is that it works. And and I can't stress it enough. I mean, you can see it here in the charts. You can see it in the performance charts, all the performance charts I've done over time. I've been outperforming the market since 2003. So anyway, enough of that. You can come over and look at it, but if you want to get started, join the community and see what it's all about. Fill out an application. Here's the numbers on today. What do we get? We kind of got a sideways day. The Russell's down about 0.5%. Nasdaq's flat. We had earnings after the bell. Google got hit a little bit on earnings, about 2% after the bell. Microsoft is up about 1%. Those were the two big tech earnings. I saw Starbucks was down, another big name, a couple percent. A couple others, Intel I believe was up. IndexX was up slightly, and then the S&P itself flat. We had the dollar bouncing back up 0.66%. Overseas, we had kind of a mixed market, not bad. Gold, silver, they take another tumble, folks. I've been telling you this is, a risk area. A lot of people, get all excited about it, but, honestly, a big risk in that area if you're trying to play that particular theme. Let's take a look at the charts themselves. Let's pop this down. Let's get the S&P up here and see what we have here. Essentially what it looks like we have is an over-under. Now, It comes after 2 days up, right? You got a little over under, a little less volume, but this volume's pretty tight. Usually when I'm evaluating these things, you got 38.4 compared to 36. So I'm too short. That's less than a percent, about 3/4 of a percent in terms of volume. To me that's pretty tight. Actually, it's not even 3/4, right? If I'm doing the numbers right, that's less than a 3/4 of 1%, right? It's pretty small. So anyway, the push up, little rest, little doji. Yeah, you can get a pullback. You can get a little retrace. Now notice, anytime you say that, right? You say, okay, where can it come back to? Well, if it did a full push down, right, it would come right back into this breakout area and test this breakout bar, that prior swing point highs bar, and do a retest, regenerate, right? And essentially, if you come back within 6 bars, you can actually get to the bottom third. So it could be a pretty good spill here if it did that, but I don't think that's what you're going to see. I think you're going to see this gap area defended now, and that's because that's where the juice was on the way up. If I'm a buyer, where am I going to look? Where's my low risk entry? It's right in that area, and I suspect that's how people are going to look at it. Let's look at the weekly. We're almost done with the week. So you get a push up over a little consolidation about 6-7 weeks. I don't know. That all looks good. Let's go to the NASDAQ. On the NASDAQ. So what do we got here? We got the same thing, over under. And yeah, it's underneath. And you got the exact same setup. Let's go to the NDX. Now the NDX is what's been leading things on the way up. Let's see what that one looks like. And we got another one of those crazy volume bars we got to fix, but that one actually did not get under, so the NDX could actually stretch some more tomorrow. And finally, over to the Russell. And what we got on the Russell, we got the over under here again, tight volume but less volume. So just looking at the indexes, it looks like we're set up for some sort of a pullback, a small pullback in these indexes tomorrow. If I go over, I want to look at the two major sectors. Financials is one. So if I'm looking at the XLF gets a doji, closes higher. And let's see, swing point high is here, 23.73, and it closes over it. So that's going to turn it sideways. And then this one is 87. So this thing, remember when every time that we've looked at these various setups, right, we always go back and say, okay, here's a trend transition. What did it break? It broke this swing point low, broke that swing point low. Where are those retest regenerates? Bearish. One of them's here, and the other one's almost the exact same price point. What did it do? Gets over it for 2 bars. You get over it for 2 bars, no longer what? No longer is the trend down, but more than likely it's sideways. Well, today you actually get that trend transition. Now, many times you won't get it immediately, you'll get it eventually, but you've actually got it immediately. Sideways at worst, up at best. In other words, you're changing trend again. And what is all this after? Well, it's after a big run, consolidation, another leg up. That's the way it looks. And the financials are going to be key to trying to take this market higher. And the reason for that is that technology has been the driver. Technology has been driving this thing higher and higher. And you can see that on this chart, right? Whereas you just looked at financials just went sideways all this time. You can see how these had already began to leg higher. Tonight, what do you get here? You get the exact same thing that you're seeing on the indexes, over, back, under, a little less volume. This one says it can too pull back a little bit, which kind of supports the ideal of the NDX doing the same. Again, I expect buyers probably to think about this area. Now this one's a little bit more stretched. Your swing point highs are way back here. And we don't have any real volume here. I think this is your key bar. So I would think this one could pull back into that area on the way back on the first trip back down. So it looks to me like technology wants to take a rest. That means something else has to step up. Financials look like something that could. To add into that idea that technology wants to take a rest, here's a bearish engulfing on the SOX, also supporting that same notion. Another big sector is discretionary, consumer discretionary. That one has pushed higher, pushes higher again today. That one can continue to try and push higher. I haven't been drawing ABCDs for a while, your projections, but they're in here. You can look at them. This one actually looks like to right there, back down. That looks like the deepest point, which would drive it up to here somewhere. So this can continue. Financials can continue. They're starting to break higher. Those can be, in other words, we could see the rotation out of the technology into the others, allow this market to continue to push. And so from that perspective, you could see how this market may not take a very big setback, right, after this breakout. So in other words, you could still continue to kind of grind and leg higher as these sectors now start to rotate around. And I think that's what you should be looking for in these numbers. I want to go and look at the two big earnings tonight that I mentioned because post-earnings plays are some of the places to be. So let's take a look at them. There was three of them that reported. Actually, let's back up and let's take IBM as well. So IBM reported, I believe it was Monday or Tuesday, and actually it was here. I guess it was last week. It was on this day, January 20th. And IBM has had a nice run higher. Let's see what the weekly looks like. Looks the same. Pull over the monthly on this guy, and you got a nice leg up. And if you do your ABCD structure here, this goes quite a ways. You've got A, looks like B is here, back down, right? That's a long push up. That could take you all the way back to this consolidation highs up here. And so IBM on a monthly got a long way to go. Let's go back to the weekly, and you got the same thing here on the weekly. Actually, the weekly hasn't even put in a B, if I'm looking at this right. 169.92. Yeah, you don't even have a B point. This thing hasn't even put in a B point yet. So you have to go back deeper to find the last one. And that one looks like it's still running right now. You go A to there, B back down to here, and then back up. So this one too can continue for a while before it exhausts. So IBM looks like it's got momentum, probably going to continue. Intel reported after the bell today. They looked pretty good on their report. They had already broken out, had volume on the breakout, and I don't know if this was today or not. Now that I'm looking at it, it looks like it was on this bar. So you got a retest, regen trying to take place here. This looks like a good post-earnings buy. As you come back into this bar, it's 37.35, and today you pushed into 37.42. So you haven't tested it yet. If you do get in there, you can test the bottom third, right? And so I would be focused on this as a potential long. And if you look at it from a different perspective, saying, okay, what's the potential, right? You got an ABCD structure here. Again, goes a long way up. So that looks pretty good. Let's see what the weekly looks like. And that looks all right. And let's look at the monthly. Yeah, Intel looks pretty good. Intel looking well. Google reported after the bell. They took about a 2 to 3% hit. Traded back into that 830 number, which was the breakout area. Yeah, you trade it down here 830. That looks like a pretty good place to buy into this guy. That would be a retest regen. Well, actually, it's not even a breakout yet, right? Because you got to get a close over this tomorrow. That number's 839. So we'll see if it closes over it. If it doesn't, it looks like anywhere from about 822 back up to that 830 area is not a bad place to be looking at it. And finally, let's move over and take a look at the last one, which was Microsoft. Now, Microsoft is a name that we've played in our portfolio. They've been doing well. Ever since they changed leadership, focused on the cloud, they've been riding that cloud higher. Again, you got nice ABCD structures here as well. Whatever the lowest one is here, it looks like it's right there. That takes it higher as well, and you got volume build up into it on a break tonight. I think if it trades back into this, it's a buy, folks. Now that you've got a post-earnings play on it. Let's see what the weekly looks like. That also looks good. And of course, you got a nice run here. Now this one, 39.72. Yeah, that looks like Yeah, it could press a little bit higher. I don't see a lot of potential here on this current run in terms of projections, right? So that may not be your best one, but you could certainly ride it for a bit if you want to. Why do you look at post earnings plays, right? Post earnings plays, I mean, think about what's happening. I'm a company. I come out. I tell you, hey, things are great, right? We're doing good. People come in and believe it, and they buy it. All right. So let's go back to that Intel one because that's a good one to look at. So I'm making an assumption here because I don't have it in front of me, but I'm assuming this was earnings here on the 24th. Assuming that's the case, right? You break out, you got volume expansion. You get a clear indication of a continuation. Now you get a little pullback. Why would you want to buy this? Well, what's the odds? Think about it. What's your odds this thing is going to break below this area, right? That's where all the volume came in. People paid up to get in, right? That's demand. Supply and demand on the charts. That's what we keep talking about here. If I see supply and demand and I see demand outstripping supply, which is what causes prices to go higher, when you get the fade, do you think those people that bought it here or even up here or maybe even down here, do you think they're not going to buy it again? I mean, we're talking about people with money, not me and you. Those people are going to step back in there and buy it again. Odds of it getting down here, if that's where your stop is, which is where it should be, odds of it getting down there is not very good. More than likely, worst case, it's going to trade between these two areas. Worst case. Best case, it's going to continue higher. And you got a general market that's supporting that notion. So when you have a general market supporting the notion of higher, you have a stock that reports and the demand shows you people are willing to pay to get in. That's a good case, right? You can't hardly lose. People love to tell you, oh, the risk reward is 2-to-1 or it's 3-to-1 or some crazy people tell you, I ain't gonna take nothing unless it's 9-to-1. They're out of their friggin' minds. 9-to-1. You're not evaluating it right if you're getting a 9-to-1. You're going to be lucky to find 3-to-1s. All right? Maybe a 4-to-1. In other words, I'm going to make 4 times as much money as I'm risking. That doesn't come along that often. 9-to-1, that's a pipe dream. That's people making stuff up. Right? They're not going to get 9-to-1. Maybe they want to. Now, when you're fortunate and you're in something over a long period of time and you happen to grab something that really does run, yeah, you can get a double, a triple. But those are like long shots, and believe me, those are even hard to stay in. You know it. I mean, you've done it. You've seen it. Yeah, you look back and say, oh, yeah, all I had to do was buy that and stay with it. Yeah, right. Stay with it, folks. It's not easy. It's not easy. I've been in some stocks now that, they move around 15, 20% on the downside. If you're not trading around a core position, you're not going to stay in it. It's just not going to happen. You're going to get bumped out, and then it's going to run without you. That's the way it works. Do you think the people with money are going to let you stay? No, they're not going to let you stay. They're going to shake you out, and they're going to take your positions, and they're going to ride them up themselves. Anyway, Intel, that's why you play post earnings, because it's not just about risk reward, right? It's not just about risk reward. That's not the whole picture. It's probability, right, of success, right? POS, baby. I need a probability of success that is high, big. If I get that, I've got a good shot to make money, right? Because I need both. I need good reward to risk. I need good probability of success. Market's going to try to pull back to Mark. Have a great day. I will see you next time. Join us. Learn how to trade. I personally will show you the ropes. Good night, folks.